Have you ever wondered what the difference was between a title, a deed, and a mortgage? Today we're tackling these important terms in the world of real estate that often get used interchangeably, but understanding the difference is crucial for protecting your investment.
If you're a first-time buyer or simply curious about property ownership, you're in the right place. In this video, we'll simplify these terms and provide you with the essential knowledge that you need. So listen in as we explore about the distinctions between titles, deeds, and mortgages, and uncover the intricacies of the real estate transaction.
Let's start with title. Title refers to the legal ownership and the bundle of rights associated with the property. When you have a title to a property, it means you have a lawful claim to it and the rights to use, possess, and transfer it. A clear and marketable title is essential for a real estate transaction.
So what is a title search and why does it matter? Before you purchase a property, a thorough title search is essential. It's the legal investigation conducted by your attorney. It dives deep into the public records to verify ownership.
To ensure a clear title, a title search is conducted to uncover any potential issues or defects that may affect the ownership. This search examines public records, including deeds, liens, encumbrances, judgments, and other relevant documents. If any defects or clouds are on the title are discovered, they must be addressed and resolved before the property can be conveyed to a new owner.
Some potential issues that might cloud the title are unresolved ownership claims from previous owners, outstanding debts or liens attached to the property such as mechanics lien or a tax lien, or easements granting access rights to others like utility companies or neighbors. A clean title search ensures you're buying a property free of these burdens.
Even with a meticulous title search, there's always a chance of a hidden issues of surfacing later. This is where title insurance steps in. As an added layer of protection, title insurance is commonly obtained to protect against any undiscovered issues that may arise in the future. Title insurance policies provide financial coverage and legal defense in cases of any challenges to the title.
Think of the title as the very foundation of your ownership over the property. It's the legal concept that defines your rights and privileges as the owner.
These rights allow you to do things with the property, like the right to sell the property to another person. You can lease the property to tenants and collect rental income. You can borrow money using the property as collateral, or you get to choose who is allowed into your home. You can make changes to the property, and you still have to follow the laws, but as long as you are within the law, you can have control over the property.
Having all these rights together signifies complete ownership, often called fee simple absolute. This means you have the most unrestricted ownership possible.
Now that you understand the concept of title, let's talk about the deed. The deed comes into play as the physical manifestation of your title. It's the official legal document, the pen-to-paper evidence that serves as evidence of the transfer of ownership of real property to one party to another. It contains important information related to the transaction, including the names of the buyer, the seller, a detailed legal description of the property, and any specific conditions or restrictions associated with the transfer. Think of it as the certificate that proves you hold the legal authority to do all the things we just talked about. You can sell or lease the property, use the property for collateral to obtain financing, make changes to the property, etc.
Deeds are crucial for establishing a chain of title, which is the history of ownership transfers for a particular property. They provide proof of ownership and they are typically recorded in the public records of the county where the property is located. Recording a deed helps establish a public record of the transfer, providing notice to the world that the change of ownership has occurred.
Deeds come in various forms, each offering varying levels of guarantees from the seller. Three of the most common types of deeds are a general warranty deed, a special warranty deed, and a quitclaim deed.
A general warranty deed is the strongest form and most common type of deed used in a real estate transaction. It provides the highest level of protection to the buyer, grantee, because the grantor guarantees that they have clear title to the property or the legal right to sell the property, free and clear of any claims, and they will defend your ownership if any challenges arise in the future. It typically includes covenants or promises that protect buyers against defect in title, such as the encumbrances, liens, or undisclosed interest.
A special warranty deed, also known as a limited warranty deed, provides a more limited set of warranties compared to a general warranty deed. The seller guarantees that they have had a clean title during their ownership and have not personally caused any defects in the title while they had it as an ownership. But they are not responsible for any defects that may have existed before they acquired the property. This type of deed is often used in commercial real estate transactions.
Finally, the quitclaim deed is the basic deed that transfers the ownership interest the seller has in the property to the buyer. Unlike a warranty deed, a quitclaim deed does not provide any warranties or guarantees about the quality of the history of the title. It simply transfers whatever interest the seller has. Quitclaim deeds are commonly used for situations such as transferring property between family members or adding or removing a spouse's name from the property title.
As you can see, the type of deed used in a real estate transaction depends on the circumstances and the level of protection desired by the parties involved.
Next, let's discuss mortgages. A mortgage is a legal agreement obtained from a lender to finance the purchase of a property. It's between the borrower, mortgagor, and the lender, mortgagee, that outlines the terms and conditions of the loan. The mortgage document creates the lien on the property, making collateral for the loan.
The mortgage agreement specifies details such as the loan amount, interest rate, repayment schedule, and the rights and responsibilities of both the borrower and the lender. The borrower makes regular mortgage payments to repay the loan over the agreed upon term, typically spanning many years.
If the borrower fails to fulfill their obligation under the mortgage, such as failure to make payments, the lender may have the right to initiate foreclosure proceedings to recover the outstanding debt. Foreclosure allows the lender to sell the property to satisfy the debt.
It's worth noting that the terms mortgage and home loan are often used interchangeably, but strictly speaking, the mortgage refers to the legal instrument securing the loan, while the loan itself is the financial obligation undertaken by the borrower.
Okay, so during the closing process, you'll sign a plethora of documents. But which one, the title, deed, or mortgage, officially grants you ownership? That's right, the deed is the key. It's the physical document that transfers title and serves as concrete evidence of your ownership rights.
Remember, title is the legal concept of ownership. It defines your rights and privileges as the owner. The deed is the physical document proving ownership. It serves as evidence and transfers title from the seller to you. And a mortgage is obtained to finance the purchase of the property.
By understanding the distinction between title, deed, and mortgage, you're better equipped to navigate the real estate process with confidence. We hope this provides you a more detailed understanding of these concepts in the real estate transaction.
Don't forget to leave a comment below if you have any questions about any of what we talked about, and check back here often for all things Rocket City and real estate.